Bernard Hickey, good morning.
Good morning.
Fonterra back in the news yesterday. It was about the fact that they wanted to actually raise some more capital. Now it's about the fact that the milk powder price is through the roof.
Yes, 24% increase, and this is after an 18% increase last month. Remember, they have these monthly auctions of
which were criticised.
Yes, while the price was collapsing, farmers were very grumpy, not just here but in Europe. But now prices are bouncing up, they might not be so unhappy. 24% this month, 18% last month. We're back to levels we saw in October last year. And that's some good news on the horizon for farmers and for regional New Zealand.
Will Fonterra revise the payout, expected payout?
We'll see. It's still early in the season. Farmers have just started milking again. We've got another, year or so to go under the bridge. And the currency, currently 67 cents, quite a bit higher than it was with their forecast. And if the US dollar collapses in the next 3 to 4 months, that would mean a higher New Zealand dollar, lower income. So I still think we have to be a bit careful before predicting a higher payout.
Let's look at the US. Unwinnable war in Afghanistan. Gold up $30. The VIX is high as well. It looks like the American economy is actually going through the speed wobbles again.
Yes, this is the double dip thing. The Fed came out last night and said the economy was fragile and that it wasn't ready yet to pull back all of the stimulus that it's pumped into the economy. Remember, it's printed so much money, and the government has pumped a lot of money in too through its deficit spending. At some stage, the Federal Reserve is going to have to pull that money out of the economy, and it's saying that the economy is too fragile to do that yet. The big risk, though, is if it keeps printing, there's a general loss of confidence in the US dollar. That would be disastrous for the global economy, and it would mean that our currency would jump well over 70 towards 80 if the US dollar collapsed.
Cheap TVs.
Yes.
Australia's doing all right. Their GDP's bounced again. They're up 0.6% for the quarter.
Yes, this is big news because they're our largest trading partner, and their GDP number yesterday was better than expected. Remember, they only actually had 1 quarter of negative growth, or they never actually entered a recession as it's defined. The only developed country in the world that hasn't had a recession. Thank goodness for that, because we're right next to them. Thanks to the Chinese buying all those minerals, and because the Australian government moved very quickly to pump money into their economy.
Okay. We can talk about Tony O'Reilly and the troubles there with the Independent as well. I want to talk about yesterday. You went and spoke to the government, to the opposition's banking inquiry. I see Sam Knowles from Kiwibank was very fair on the other banks. Anything you want to tell me about that? A worthwhile process for you, or for democracy, or for banking?
I think it was worthwhile because it forced at least one side of Parliament to address the real issues here. It's not about banks profiteering. I explained to them with a lot of detail how the banks, the big four banks, have actually seen their margins, their profit margins, decline in the last 5 or 6 years, and again in the last year, even though they haven't passed on all the official cash rates. That's because of higher funding costs. The real issue here is the distortions that the Australian banks, and all banks, are pushing through into our economy because of their preference for lending to housing. Now, this is driven by demand. People want those loans, and because of the way that our tax system is structured, and that we are forcing our economy down the track of more property investment and not down the track of more investment in exporting.
So you're saying the banks should charge higher for property mortgages as well to actually put the brakes on the economy, on house buying?
That's right.
Can they do that, though? Because otherwise people just say they go borrowing it for a business, and then the business would be buying houses.
The real issue here is that the Reserve Bank can change the rules so that the banks have to put aside more capital when they lend to housing. That would restrict them. And I think if we can get the government thinking about structural issues, not so much
Were you heard, Bernard?
Yes. No, it went over time, and they were very interested.
That's the important thing. Thanks very much.